Good morning, everybody. Well, markets always do what seems to be unbelievable at times, as long as I've been doing this. News events, but this explosive move off of the low. Good morning, everybody. Quiet that down. So, as we approach the top of the range, caution is warranted, especially after a move like this, and we've got room to get to the top, which opens the question, of course, is can we get another day of moving up to reach the top of the range tomorrow? And we'll see. We'll see what today ends. But this kind of a move, as you all know, if you've been here for a while, creates a void below. And with nothing much below it, it opens up the door to sizable pullbacks. We'll see if that actually occurs when the time approaches. We reviewed the internals yesterday in the green room there, and you can see it has the room before it gets to a bearish level. We'll see where this ends up tomorrow, but what we reviewed yesterday was that there was room, and it's gotten through this little resistance area right there, stalled for a little while yesterday. We had that little short, scalper short near the end of the day in the S&Ps. It worked out nicely. So now as it continues, as we do bar by bar, we'll see where it ends up today. And just take a look at S&Ps, well, the spiders anyway, with the gap. You can see this is weird looking. It's probably a bad tick. Let's just take a look at SSO. Whatever reason, it gets fewer bad ticks. That's the, it's not as liquid, but it gets fewer bad ticks. So up at around $80. So a little congestion area right there. And with any gap up, there's the potential for, selling the gap now that it's going to be up several days in a row at this whole number. I want to go back to the spiders here. 350. Okay. 350. 50. Right there as well. And gapping above a topping tail. Weird pattern. Very weird pattern. Okay. So you can always speculate, is it short covering? I mean, when they go straight up like that off of a low, it's certainly possible. Whatever hedging was going on prior to the election. And there's still the news to come as to where it all ends, that election anyway. So gapping up into this area of this minor topping tail. And let's take a look at the NQs. Again, same story. We've seen pretty much the same thing day to day, with patterns looking quite similar between the markets. It isn't always the case. You would think they would be, but it isn't always the case. Well, something's always showing relative strength and relative weakness, but even the intraday patterns have been quite similar. And so as this moves up closer to the top of the range, sellers were up there before. The expectation is sellers will be up there again. On the way up, looking at the hourly chart, it's very controlled and consistent. Whereas you can see this is going straight up. This is quite controlled. And that was a deeper pullback, but nice advance, bullish consolidation, continuation up, top of the wide range bar, move up, and now a controlled little pullback. It looks quite controlled here. And this is the perception that you get looking at different time frames. You can see on the 5-minute, it's beginning to drop quite sharply to the downside. So we'll see as this comes down to the next level, whether buyers begin to show up there. I suspect right around there, right? The 12,000 level should be where buyers should want to step up. A little bit more of a pullback. And YM. Straight up, coming up into resistance. It didn't take out yesterday's high, though. So showing some relative weakness. So a little bit more of a leaning on the bias, or maybe a gap and sell-off at the open. Maybe it's begun here. This one's, I guess, the most crazy pattern. The move up, whip back up and down, and now this inside day. Bonds back up again. And coming off of that low and little breakdown underneath there. And we talked about over all of these weeks and months, the expectation of a move down to this support, and buyers stepped up aggressively. So a technical bounce for now. We'll see what it looks like in another week or two. The explosive move there yesterday. And coming up into the sell zone, oil on the daily chart. That downtrend there. Interesting alignment of moving averages. Unusual for them to look that way. I guess with the whips up and down. You don't see them moving that way with the three of them. You often see the 20 and the 50 moving in that way, but with the 200 like that, it's really kind of weird. All right. Playing the bounce. If you get a pullback, McGraw, if you want to play the bounce on that. I mean, it's up near resistance here, so 5 minutes in a downtrend, you got to wait for this to begin to bottom out here and turn up. No point in thinking to buy at this point yet until, from my point of view, until the 5 minute begins to form a little bit of a base. Gold coming back here. You know, my view of this being a breakdown failure didn't look very promising when it couldn't get through here and came back down, and now it's coming right back up again. So it'll become even more bullish if this can get through this level. And the reason for that is that the concept of corrections over time. So breakdown failures, typically they do this, but they come back up to the top of the red bar and start going sideways there and break. So, this one is obviously a lot more different, that it didn't go sideways at the top of the range. It's more forming a retest and failure pattern and coming back up. And that being said, the sideways consolidation, the idea of that and understanding the price pattern is that it moves away from this congestion area right there. And so this back and forth, right, the time correction makes this less significant as a reference point. And our bias becomes, based on this pattern, that it's going to go through that. And it should go through it decisively when it happens and go through. Maybe it stalls there on the daily chart or the intraday charts at 2000, and it just keeps going based on the higher time frame uptrend. So that's something we'll see where this ends up this week. But this implies that gold is going to have a move higher. And of course, silver is up here as well. Similar pattern, not quite the same, but it's similar. And it'll have more of a void before hitting any resistance. So it should go up as well. And we on the daily chart, we'll see how it deals with this resistance area right here. That bottoming tail bar tells us that buyers are stepping up on the dip, and they should continue. So here we have what's called being a passive buyer, meaning buyers want to get in, but they're sitting there on the bid looking to get filled in anticipation of it going higher. Whereas as it starts to break out, of course, that we're assuming that it will, as it starts to break out, those passive buyers have to become what's called active buyers, meaning you're not going to be able to get in so easily because now the trend is turning around and you need to take the offer. Right? So active, more aggressive buying, taking offers. And that is what produces, patterns like we have in equities right now, where, you need to be more aggressive. There are less traders or institutions getting filled on the pullbacks, and so then they have to take the offers after though that demand gets filled up, whatever supply there is to fill it. You need to take the offer after that pattern completes itself, the bottoming process. Fed today too, Oliver's telling yen. Breaking out above this area here. I'm not sure what the implications are. A lot of people look at the yen as a indication of what the broader markets are doing. I've seen the correlation, and I've seen the correlation totally, fall apart. So I don't look at it that much. It is pointed to at various times. U.S. I can't bring that up on this platform. I have in TC 2000. I don't have Forex on here because I don't trade Forex. If I'm going to trade currencies, I'd rather do it in what I would consider a more honest market. You can bid and you can offer futures, and Forex, you got all of these different market makers there trading against clients and whatnot. So don't care for it. This looks like it's going higher. It's got room to go higher. And with the implications of that, I don't really know because I don't follow it that much. And Alex is asking me to take a look. I think he has to take a look at Bitcoin. Breaking out. Wow. There was the turn. And what's going to stop it here? Maybe a whole number, but there's nothing there of any real significance based on price. So that looks great. I mean, range expansion here. So when you see a range expansion bar, the nice thing is it's coming out of multiple days of chopping sideways. And look at all the bottoming tail bars. Every time it dipped, there were buyers there. That's what you want to see. If you're long and you're holding on for a bigger move, and you see red bars forming, of course, that's going to make you a little uneasy that maybe it begins to break support and it turns into a bottoming tail bar. That's the power of bar by bar analysis. It just keeps your emotions in check. Of you see that red bar and it's like, you start thinking, oh, it's going to go down. So you need to realize, how much time is left. So you should always have a timer, either on your chart if it's available in your platform, or there's plenty of little, add-ons for timer, but knowing how much time is left in that bar. The daily is easy, but as an intraday trader, you see, oh, look at that red bar, it's going to go down. Or, you think if it's in an uptrend, you see a green bar, it's going to go up, and, 5-minute chart, you say, oh, there's 4 minutes to go. Well, that green bar can turn into a big red bar. So you need to know how much time is left in your intraday time periods. And you can see over here, the hourly still got almost 45 minutes to go. So that looks great. Looks like just keep going. So, and there you go. Markets all pretty much going up. They're coming to the top of the ranges. So be cautious here this morning for a little while. Let's see if it holds on to the gap. And if it does and looks green at the end of the day, well, then that leads us to believe that it'll move up to the top of the range tomorrow. And that being Friday, if we get a gap up, probably going to be a gap and crap, but we got this whole day here to see how it unfolds. It's transports. We always look at the transports. What a mess. What a mess. It'll be interesting to see if they gap up and can negate that topping tail bar. So, all yours, Dan.
Good morning. Yeah, woke up today at 5, looked at the gap up on the Qs and the whole market. I just shook my head again. What a crazy big gap up. So it's gonna be hard to get on board these things. Yeah, this Bitcoin here, I mentioned that the monthly looks fantastic. Kind of reverse head and shoulders there. Yeah, Scott, I was thinking of that. I was thinking of you this morning. Now we don't, I mean, hey McGraw, you're dropped down. But yeah, Scott was saying, yep, markets are gonna be up, doesn't matter about anything. And I made a comment the other day. At first I agreed for the initial 2-day rally. Because I remember telling Debbie, I said, Debbie, the market looks like it just wants to go up, period. But then I made the comment, I said, if Trump got elected and then we had all these riots and burning down buildings and looting going on, that's when I said I have a hard time seeing the market to continue. But right now it's still partying on, I guess, on the heels of gridlock. All right, so we only have 2 open positions. We are very, very light. We just decided that it was more, I mean, you all are more active in here. Day trading's been good. Some of you have done great swing trading, taking the overnight gap risk, but we did not want to just get our subscribers into that. Let's look at, I got a ton of earnings here today. Upwork, 25.75, gap's too big, nothing to do with that. Jake, yesterday I told you I liked that for a put spread. Wow, 142. Wow, that's gapping to all-time highs. Yeah, I liked it yesterday. Yesterday was your entry day, 15-minute high. I'm seeing these marijuana stocks. Marijuana is moving on pre-market data. Marijuana is moving, I guess, with the Biden team wanting to legalize it. So yeah, well, we looked at a couple the other day, and they got slammed back down, and now they're back up. That's been a tough sector to trade. SEDG, this was, we were talking about yesterday, Jake, kind of a reverse head and shoulders. Ignore that pre-market, left shoulder head, right shoulder. It's just the day ended before taking out the neckline, but now it's gapping up. So this would be a short-term put spread now. And I did mention that the last 2 days also, that I thought it was fantastic put selling opportunities, because you just sell them under the week's pivot support. The VIX was still elevated. Wayne, Dunking, I have a call from yesterday. Yeah, Dunking looks good. Yeah, we've been talking about the turn for a couple days. Yesterday was just a doji bar. It's still obviously lagging the broader markets, but it looks higher. It's a bullish pre-market. So maybe put your stop 30-minute low, Wayne, but it looks higher. TAN put spread. If maybe for next week, and what's the juice? Yeah, it's a bullish gap. Well, it's actually gapping right to resistance. It's a buy setup on the weekly. If it breaks out, then this is a little downside shakeout. It's an idea, McGraw. There's so many candidates for put spreads. You just got to go through the checklist and tell me what the juice is. And I doubt we're going to get anything for tomorrow on these extended stocks, but for next week. So Capri here gapping up. This looks great. I don't know if this was earnings, but kind of a ascending triangle breakout. Ascending, and it looks good. I'm gonna put that on the list for a day, a day trade long, swing long, or put spread. It looks good on all 3 time frames. Tilray, yeah, King Arthur, yeah, the whole sector. This one's not as good. It's just still in a trading range, but I want to keep an eye on ACB because this one is a gap. See, this one's a gap breakout. So yeah, checklist says major news event today. FOMC, but if you're swing trading, Scott, you're aware of it, and that's an individual decision, but we kind of sit through those. If you're swing trading, day trading, definitely I would be flat ahead of that. Everyone knows what's going on with the Fed. I really don't predict much movement from it. They're just in cruise control of low interest rates, of buying bonds. Yeah, you'll get the typical 3 whips. I know. Shall I be in FOMO posture? No, not me. Well, I mean, the FOMO day was today was Tuesday. It was the gap breakout. Look at this bottoming tail into the gap fill. Yesterday, I candidly, thought that big old gap would get shorted into. It did a little bit, and then snap right back. Today, I'm thinking my bias is kind of the same, but these are multiple big gaps. But this is the third. Well, actually, it's the fourth. We got 4 gaps in a row. Look, this bottoming tail was Friday. So we got Monday, Tuesday, Wednesday, Thursday. We're way the heck up here. So the more extended it is, the more cautious you have to be. Will I consider a long on something? Only if it's a fantastic setup. Like Capri. This looks good. Let's see, I had 5 on my list yesterday. It's actually relative weakness right now. But as long as we can get a bullish pattern that's closer to support, then I like it. McGraw, you gave me these 2. Now, again, this one's been lagging, but now is the time to enter this thing. It's close to support. It had a closing breakout bar, and it looks fine. You can buy the highs, stop week's low. ALVR also same. These are bottoming patterns, so but I like yesterday's bar. But yeah, my bias is to look for day trade shorts. Yeah, after four big old gaps. Let's see, YouTube's TDG long. It's a mess. It's at the top end of the range, up 6 bars at resistance. You would need a big stop. Not crazy about that at all, particularly with the extended markets here. And Belly's asking about Fox F. 1, 2, 3. It's not a 1, 2, 3 because that's not a big wide range bar, but it is a bullish consolidation bar after a breakout with a price void. So it looks fine. Yeah, I just wouldn't call it a 1, 2, 3, but it looks higher. I'll put that on the list. But you know how I on my trade checklist, I like the broader markets wind at my back. And if the broader markets are stalled here, then your individual stocks, unless what we say they're on their own page, they're going to have a harder time moving up. So that was GLD. Coup up here, 309. The gap's too big, but you know, reversed right where it should have. Isn't that a cup and a handle in Fox F? No, it's a consolidation and breakout. I mean, if you're usually the handles aren't that big, but again, that's why even waste time arguing of whether that's a cup and handle. Who cares? It's bullish price action, bullish inside bar. KXIN, King Arthur. Yeah, that's on my list. I saw that gapping up. So I'm gapping trades. I use the pre-market in connection with my decision making of whether to enter or not, and looking for a pattern. So King Arthur, pre-market, it's already extended, so I don't like it. Compare that to Google yesterday. This was one of my kind of favorite day trades yesterday. So these dotted lines are pre-market. This is a picture of beautifulness on a gap. So then here's the first 15-minute bars high right there. That was a beautiful day trade long, 15-minute high. But this one, you see the difference? There's no way I would buy that pattern. See the difference there? So that's a very valuable lesson. You need a setup here. Right now it's too extended, unless you give it a big old stop. Matul's asking about Facebook. Yeah, that thing. Yeah, we sold a credit spread on that yesterday, and that darn thing just kept going. I don't know what your question is on Facebook. I have no idea what to do with it. It's still a bullish gap, but it's extended. You know, things run up from 260 to 295 in 3 days. XPEV, once again, I have no idea what you want me to do with that. That thing's run from $18 to 30. If it sets up bullish on the 15-minute chart, you can day trade it. But you know, Jake, there's absolutely zero pattern for me to swing it. Do you know that? Everyone knows that. You all know what our patterns are. The pictures of the animals. And if it's not one of those animals, then, you know, I don't want to hear about it. But again, even I say this all the time, if you get a bullish intraday, then go for it. Amazon. The problem, Tehran, with put spreads on these things is you're gonna have to go to. We got a couple problems. What strike are you gonna do? They're all extended now, and I don't know what juice you're gonna get. And if the broader market's gonna pull in, now's not the time. I've said the last 2 days was the time. So I'm not adverse to it, but I want something closer to support. I want to keep an eye on Netflix. Now I know it's lagging the Qs and the other FANGs, but it's closer to support. Now, if we can maybe look at the 470s for next week and see what juice there is, then that's a candidate, but I'm doing nothing right now. ASX. Hey, Seuss, you all, it would help me help you if you all tell me what your question is. Wow, look at the tick.